Hey there, it's Bill with Smart Trades. It's about 10:25 a.m. Pacific time on January the 31st. That's a Monday, and let's get right into it. So as always, some of these charts are dated as I posted them to my newsletter yesterday. And start right off the S&P cash. There is a possibility that this decline is a C wave and an expanded flat. If that's the case, you would expect the S&P to hold around 1262. Now, obviously, we've already rallied from there from a higher level on the cash. That said, the our futures overnight got down to almost exactly 1262, and that is a pretty nice looking pattern for a potential irregular flat. That said, I still favor that the top is in. I do want to acknowledge, though, the longer term trend is still up, and we want to take this one step at a time. We're looking for confirmation here of a top, and what we want to see is a corrective rally, something like this. Indeed, my projection yesterday was the 1285, 1295 area for a rally in the S&P. And so far we've gotten up, back to just below that 1285 basis, the S&P cash. Here, indeed, is that longer-term trend, and you can see we are still holding the both the relatively short-term channel and a longer-term channel. I would note here the 1170 down to about, say, 1157 area. That's the previous fourth wave. If we do break, if we do have a top in, that would be the target level for the next move, the intermediate to short-term to intermediate term move, if indeed we're correcting this this entire move up. In fact, I think we're actually into a larger correction than that, or at least we will be in the months ahead, but we shall see. Here is the weekly chart and the count of 5 waves up potentially in the C wave. My old target of 1290, which obviously has been exceeded. And again, here's that 1170 area. The next target after that would be the B wave low that comes in around that 1000 level. And below that, about 910 on the S&P would be the longer term target. Here's the Dow chart, 130-minute. The high was actually just over 12,020. 12,020 was the target, pretty much a direct hit. And here is the hourly chart on the Dow that I posted yesterday, looking for a rally to 11,900 or so, and I think we've gotten up to about 11,888 so far. So we're definitely in that zone. Breath ratios have actually improved. So I do think that the potential exists to go a little bit higher. Ideally, what we'd see here perhaps is a little bit of a decline, have breath rollover, and then rally back up and then fail. I wanted to also show the longer term chart on the Dow, since we are into a possible intermediate term turning point. And if indeed that's the case on the Dow, next support would be about 11,000. And then about 9,800, 9,900, 9,200 after that. Long-term potential for this pattern actually is all the way down, assuming I'm right, to about 7,700 basis the Dow. So the idea that because we've moved a bit higher, we can't move substantially lower in the next several months or years, I don't think is valid. That said, it's all contingent on the assumption that we're into this pattern that I assume we're in, which obviously could be wrong. And the pattern that I'm looking at long term is that the entire decline from or entire pattern, I should say, from 2000 to 2009 is a expanded flat that completed in 2009, and that's just of a very large sideways bear market that we're perhaps not even into the middle of yet. And from there we've gone up, and this is potentially A up to our high on Friday, and we're working on B down, which again could take us as low as 7,700. But as always, we'll take it one step at a time. We're getting way ahead of ourselves in terms of that. Let's just see again if indeed we have a top. And here is the up-to-date chart of the Dow 60-minute. Pretty strong breadth ratios. 2250. That's a good ratio. 2500, 2600 is where it maxes out. But usually when you get these kinds of ratios above 2000, and particularly as you head up towards 2500, it usually means that the market is going to at least retest that high. Obviously, there's no guarantees of that, but the other thing to note here is that we have a relatively weak rally. We have about a 4% rally basis, the Dow, on very strong breadth. Basically, it's like an engine that's revving at very high RPM, but you're not going very fast. It basically shows that this market is weak, and that there's a high probability that the rally so far is corrective. But as always, one step at a time. And let's look at the S&P cash. Here's again an update of the chart that I posted yesterday. Looking for a rally basis, the S&P up to about 1285, 1295. We haven't quite. Well, actually, we have hit 1287, so we're into the lower end of that range. Again, because of the relatively strong breadth, I'm thinking that we could go actually a little bit higher, certainly than today's high, but as always, one step at a time. And I'd also like to finally look at the daily chart. Here again is that previous fourth wave low that I mentioned. We have 1157, 1173. 1173 is actually the bottom of the previous fourth wave. 1157 is a previous target of mine, and also a resistance point. So that is the range. If we do indeed get a top here, an intermediate term correction would at least, and again, I emphasize at least, target that area, but that area could provide an initial bounce and perhaps even a fake out for the bulls. But as always, one step at a time. Let's see if indeed we have a top before we address what's going to happen at that support level, which is probably a few weeks off. But you never know. Like we saw last May. Things can happen very quickly when they begin to unfold. Anyway, thank you very much for watching. Hope you have a great week ahead, and thanks again. Bye-bye.